I think the worst outcome of the three, which would be deal, or no Brexit, personally, I would think the biggest risk would be no Brexit or a second referendum for the global economy. And that's because I think given the political winds surrounding what's happening globally, there's a lot of questions about the elite, about how they're moving, and I think that would really cause a lot of uncertainty. I think for U.S. equities, the U.S., they say no man is an island, but the U.S., just given the structure of its GDP equation, is probably pretty well insulated from what's happening in the U.K., at least for the moment.
And given what we're seeing in the markets today, is it pretty clear that the traders, the investors, just really aren't paying attention to what's happening in Brexit?
Yeah, Contessa, I think that's right. I think the risks are more. I think what the market is largely discounted at this point is that there's going to be some sort of trade deal between the U.S. and China. That Brexit, if it does happen, will actually not have a meaningfully big impact on a European economy that's already weak. Those are things that are priced in. I think if it goes the other way, obviously it could change. But again, the U.S. runs a trade deficit, so we're so much more driven by consumer spending. In my opinion, we still have a lot to go in terms of government spending as a tailwind for GDP growth in the States. And then hopefully things will calm down enough so you get capital spending. But just given the structure of our economy, it's hard to get really exercised about what's happening abroad, it seems to me, for U.S. equities.
What about the impact on the U.S. dollar? Is dollar strength a concern?
I think it is, and I think that's the thing that the Fed has learned, I think, twice the hard way in the past 3 years. I mean, the old days, before the financial crisis, the idea was largely that the Fed did interest rates and the Treasury did dollars, and never the twain shall meet. That has changed in the last couple of years because you had synchronized monetary policy. If the Fed tightens too much, it learned that the dollar will get too strong, and it causes risk assets to weaken, and that causes other problems for the Fed. So in my opinion, for the time being, the Fed very much appears as if it's, as it says, patient. I don't expect the Fed to tighten. I would be surprised if they tighten one time this year, but in the second half of the year. And if that's the case, it seems to me the dollar strength story should be relatively weak, or should be weaker.